Hello, traders. It's Tuesday, October 4th. We're 3 hours into the trading session. Let's take a look at the last two picks. I'm going to teach you a little bit about gap and go trading today. We've got a gap and go formation. We'll do our market analysis. Netflix was one of the stocks that I liked. You can see how the stock has been compressing, compressing, compressing. Let's overlay the S&P 500. Market has been down, down, down. Stock has been able to find support and stay above that 50-day moving average. In that video, I had mentioned leaning on some of the major moving averages, that 50-day moving average being one of them, and selling an out of the money bullish put spread on it, even though the market did not do what we expected, which was to bounce. This bullish put spread would be in excellent shape right now. Lilly, that was another stock that I highlighted. I gave you two bullish picks in the event that the market would bounce. We had this long green candle at the time of the video, and we wanted the open of that long green candle to hold. It did not, and that would have represented a horizontal breakout. So this one right out of the gate should have been, it didn't hold that level, so it really didn't meet the criteria that we were looking at. The other thing I mentioned about Lilly is it's a very choppy stock. I do like the fact that it breached this downward sloping D1 trend line. It's been able to find support above that 50-day moving average. Nice long green candle today. So I like it. I think it sets up well for selling an out of the money bullish put spread down around that 100-day moving average. You might need another little dip in the stock to be able to get that off, but I do like this breakout here, and I like the fact that it's been able to challenge that resistance level again at a time when the market has what? Been down, down, down. That tells me that institutions are in there buying the stock. They feel that at this price level, even given the market backdrop, that it's a good value. Well, that's what we're looking for. We want to follow the smart money. That's the system that we trade. Relative strength helps us find that. So let's take a look at the market. Why in the heck did I feel that there was a bounce coming? And this was when I had my last video right in here. Well, whenever the market starts riding the lower end of the Bollinger Band, you're pretty much going to get a bounce. So here, we start riding the lower end of that Bollinger Band, get a bounce. Riding the lower end of that Bollinger Band, you get a bounce. Riding that lower edge, bounce. Riding that lower edge, there's our bounce today. Unfortunately, it didn't happen here, and we didn't get the follow through, or the picks would have fared quite well. Even with the market making a new low of the year since my last video, these two stocks held up pretty well. Lilly you should have avoided because it gave up the opening price, but Netflix has hung in there very nicely. So I'm going to look for a couple of stocks today that might be good on the long side, but know that we are in a bearish downtrend. The one thing that we want to keep in mind is this gap up here. This is nice, and this tells us that there are buyers. But on these first moves up like this that look super, super strong, we have to expect that there's going to be a bid check along the way. At some point, sellers are going to come in and they're going to test the conviction of buyers. Very, very similar to what we saw back here. And you can see this was the previous low of the year. You can see how we fell down to that low. We had a little bit of a bounce in here, and then support was established. And then we had one of these long green candles that filled in a previous gap. So here, got a gradual drift lower. We're starting to mix in some green candles. There's a gap right there that was filled by this long green candle. Hey, that looks similar. Heavy volume, heavy volume. Okay, so this must be go time, right? Not so fast. Yes, I like what I see, but oftentimes you're going to get a retest and maybe even another retest. Now we have a series of higher lows. Okay, now I can get more aggressive because I know that there is firm support. And when the market starts to find support at a higher level, it confirms the support because buyers no longer feel that we're going to be able to get down to this level. They want to buy right now. And as we have this retest here, you can see how instantly gobbled up. So this is the type of support that asset managers like, trading companies like, because it tells them that this support is firm. So this is what we'll be looking for. Yes, I think you can sell some out of the money bullish put spreads today, but I think your even better entry point is going to be on a small pullback, a higher low, and then we're probably going to see some continuation in this bounce. What's got everybody so excited? Really, the backdrop hasn't changed much. We've got a lot of credit concerns starting to surface. We have the UK having to prop up its own currency, support its own bonds. That's never a good sign. We have China continuing to show economic growth slowing. They're having problems with their real estate market. So there are a lot of issues. The Fed has even come out and said, hey, listen, even if we see some temporary relief in food prices and energy prices, that's only part of the inflation problem. When consumers are out there buying services or companies are out there buying services, the services are very expensive. Hourly wages have gone up. We also have housing costs going through the roof right now. That is not going to change anytime soon, and it is a huge component of inflation. So the Fed is already setting the table for, hey, maybe inflation is going to stop going up as quickly as it has been, but we do not expect a big pullback in inflation. Some moderation, but this is going to take a long time to resolve. What does that mean? That means they're going to keep interest rates high for quite a while, and that will pressure the market. We're also seeing signs that a recession is coming. FedEx announced that they see a global recession coming and that they expected to see a bounce in China when it was coming out of COVID. Didn't see it. And now in the Wall Street Journal yesterday, they were reporting how many of these large shipping companies that ship containers are seeing dozens and dozens of shipments canceled. This is during their busiest time of the year. And some of those rates have fallen 75%. That is big. We're also hearing that retailers are cutting a lot of their orders because they need to deplete some of their current inventory. That's not a good sign either because it means that consumption is starting to slow down. So any type of bounce that we get here, we have to temper this move as only a bounce. So how high do we go? Well, we've got a couple of resistance points. As downward sloping trend line would be the first one. Then we've got some major moving averages that we have to watch that will come into play. So any bullish pick that I find today, you have to tread cautiously. This is the start of perhaps a nice little bounce. Perhaps it lasts into year end. Maybe we only get a few days out of it. What I can tell you is that the height and the duration of this bounce will tell us how aggressive buyers are and how aggressive sellers are. If we only see a tiny little bounce that lasts maybe a week or two, and then earnings season starts to keep a lid on the market because guidance is lowered, and then we start to roll back over, that will not be a good sign. If it lasts a lot longer, like this move did, and the height of it is nice, as this move was, then we can have greater confidence that perhaps this will be a double low and that the market is going to establish support somewhere around the 360 area and that we have a nice chance for a little bit of a rally into year end. That would be fantastic. So we don't know how long it'll last. We don't know how high it will go, but it will give us lots of clues along the way. So let's take a look at today's price action, and we're going to talk a little bit about gap and go formations. Gap and go formations are where the market gaps up and then it continues to go up. In my opinion, it's a very risky pattern to trade, and there are a number of reasons for it. If you take a look at the market right now, I'm going to take these Bollinger Bands off because they're going to obscure some of the charts. So We'll do that very quickly, and now we'll have a clearer chart to look at. Why are gap and go patterns so dangerous? Well, first of all, you have to act very, very quickly. I never like to act quickly when I'm day trading or short-term trading because that forces me to make decisions that I may regret, especially in a bear market when you have a gap and go formation. There have been many, many, many more of these that have failed than have actually materialized and gone higher. And so the danger is that, first of all, you've got this big move right here. That is a big 50, 60 point S&P move. Well, now all of a sudden you've got a fair amount of risk that if the market retraces, all of this could fill in. So now I'm going to be buying on that first long green candle. Probably not, because I've seen a lot of these have maybe 2 or 3 green candles and a long red candle that takes out the open, and then you start filling in. So now, okay, we start to see that, yeah, I've got 4 or 5 nice green candles stacked in here. So yeah, I think I could buy in here. Well, most of the move is almost gone. Look, you hardly even have anything else left to trade. And a common pattern for these gap and goes is that the market will run up maybe for an hour. Sometimes you'll get 90 minutes out of it, and then it's going to flatline, and you won't get anything else until later in the day. We also don't like these compressions, and the reason that we don't like compressions is that once the market gets stuck in these trading ranges, it tends to stay in those trading ranges. And I'll give you an example right here. I don't have to go back farther than yesterday. And you can see how we get this nice rally. Okay, this is good. These are nice candles. And then we compress. Nothing doing. There's a nice long green candle to get bullish speculators excited. And then there's no follow through. Compress, compress, compress. All right, now we get a little bit of profit taking in here. And now the market starts to actually look like it's crowning, like it's ready to roll over. Well, that's what we want. As a bullish trader, here's what you want. You want for this to look like the market is going to roll over and fall apart because that's going to attract bearish speculators. It's also going to flush out some bullish speculators because they're going to go, I just don't want to be long anymore. I've already waited 2 hours for this thing to materialize and move higher, and I'm just going to take my gains and I'm out. Well, as soon as this move starts to look like it's going to gain traction on the downside, that's when you'll get a nice release to the upside. That's what I'm expecting today. But you're going to have to be very patient. You're going to have to wait for this compression to finally run its course. And what we use is the OneOp indicator. So in this case, we will be looking for a trough in OneOp and a bullish cross, downward sloping M5 trend line. Okay, we could start buying in here. And then we've got some nice upside. Later in the day, we had a bearish cross that ended up being pretty decent as well. So gap and go formations, very risky because you have the chance for this to be a gap reversal. So how do you trade it? Well, if you miss this move higher, then you have to wait patiently for exactly this type of pullback, and then you'll get a nice little late day surge. The key to this is you do not want any organized selling. So you do not want to see any red candles today, no long red candles. You want to stay nice and tight up to this high of the day. So we would not want to see 2 of these and then another long one. Okay, well, once you start distancing yourself from the high of the day, you start destroying that bullishness because it shows you that sellers are not going away. They are still pretty active and they can push the market lower. Instead, what you want to see is you want to see this compression continue because bam, bam, as soon as sellers come in, buyers are saying, not so fast. How many more you got? I'll buy them right here. And so the market never gets going on the downside and you have that support and then eventually that liftoff. So when can you buy a gap and go formation? Well, on a daily chart, what you'd like to see is you'd like to be buying those gap and go formations when you have firm market support established and you've been down on the lower end of the trading range. So an example of that would be you get this pullback here, you've got a retest, a bullish hammer, a couple of closes near the high. So in this case, the market rallied all day, forming a green candle. We closed right here. What happened the next day? Market, big gap down. Well, wait a minute, that's a green candle. How can you say that was a big gap down? That is the opening. That's where it closed the prior day. So you get this big gap down, and look, we even test that low of the day. But what does the market do from that point? Rally, 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 all the way up to close on the high and above that prior day's close. All right, now this is confirming support right here. Now, if I get a gap and go up here, yeah, I could trade that with pretty good amount of confidence. Just day trading. I'm only talking about day trading. So here you've got actually another gap and go formation from there to there. And now you know that there's support in here and you're near the low end of the trading range. Okay, you can have greater confidence in that. When you start getting up pretty close to the highs in here, then you have to be super, super careful. Why? Because these candles right in here, this is where the market opened. That's where it closed. So even though you had a gap up, that was a gap reversal down. So you have to be careful when you start getting up near the highs here that you're not chasing a gap and go formation because the market very likely could be exhausted. And then the flip side would be also true when you have a gap and go downside formation, like up in here. You're up near a relative high. You're already seeing some signs of resistance. You get this gap down and then follow through and you're taking out horizontal support. Okay, that's a gap and go I can get behind because I have confirmation on a D1 basis that this move is going to go. So tomorrow, if I get a gap up and a go, would I buy it? No. What I want to see and when I would take that trade is if I have a nice drop and then a bullish hammer or a green bar that finishes near its high of the day and then a gap and go. Yes, that would give me the additional confirmation that I need to know that any gap and go from this point on, I know I've got market support. This should attract buyers and then we can go higher. So I hope that this gives you an idea. It's all about context. Really, trading is about context. How does this current move fit into the longer term picture? If you're able to draw those relationships, you are going to know exactly how to construct your trading game plan. So that's just a little information on gap and goes. In general, this is not one of my favorite trading setups because I am forced to make a decision immediately on the open, and I never like doing that. So, what would have been my ideal setup today? My ideal setup would have been we closed yesterday near the high of the day. That's nice. Long green candle. Gap up this morning. Overseas market strong. So we see this early gap up, and then we start to leak oil. Mixed overlapping candles starting to get into this gap. And as the market leaks lower, I'm looking for tiny, tiny little bodied candles. That's fantastic because as the market is coming in, I can see that there's support because the candles are mixed and overlapped. And so now that tells me that buyers are coming in. This is not a gap reversal where you get the gap up, long red candle, long red candle, long red candle, long red candle, immediately filling that gap. No, not happening. So this is not a gap reversal. Instead, they're just testing the bid. And as the market starts to fill in some of that gap, I start to see bullish hammers, tails under body. Okay, this is also giving me valuable time to find stocks with relative strength. Now I wait for that support. I wait for a bullish 1OP cross. And I've got lots of upside, and I already know that my downside has been tested. So any fear that I had that the rug was going to get pulled out from under me, that fear is gone because the early price action lower until it forms support, and then boom, 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 boom. Oftentimes we will climb very, very quickly. So that type of setup has much less risk. Final note on gaps. When you have a really big gap of more than 50 S&P points, 60 S&P points, the chances of that being a gap reversal are pretty dang slim because there's a lot of momentum behind that move, or it never would have been able to get that type of lift, that type of height. So when you see those really big overnight gaps up, and don't be so anxious to look for any kind of gap reversal. But if you get those tiny little drifts lower, that'll be an excellent opportunity for you to enter long positions, or even just a gap up and then compression, compression, compression with green, red, but holding that opening price level. Those are excellent. There's some market analysis for you. Let's go in and see if we can find some stocks that look pretty good today. I found one earlier today. I don't know if it's still holding up or not, but it definitely met my criteria. So I'm going to go into green royal flush, and I'm going to see which stocks have buy signals across all time frames. I love this FSLR. This is going to be my long pick of the day. You can see that we had horizontal resistance right here, slight downward sloping trend line. Boom, breach to the upside. Heavy volume as well. We'll put up the 10SI indicator, which shows us strength versus the market. Look at that orange line above zero. This stock has a ton of strength. I really like it. So FSLR, that is your pick. We are going to maintain that pick as long as the market is staying above. And let's get our market bearings here because I like to have caveats. What would I like to see the market do to maintain and preserve my bullish bounce thesis? Well, I would like the opening from today to be preserved, and the opening was 372.40. So that also was the high right there. I want to see that preserved. That now becomes a nice little horizontal support level. As long as we have that, FSLR should continue to move higher. We've got that really nice D1 breakout. So that's what I would be looking for out of the market. Let's take a look at a couple of other stocks on the list to see what else might conform. We've got a nice downward sloping trend line here. Amazon not quite able to get through that level. I'm just flip through a couple of these. This is pretty nice. This is Wynn Resorts. You can see how it's trying to get through this horizontal resistance level. It's got the 200-day moving average keeping a lid on it, but if it can get through that, it's got a nice chance to move higher. Looks pretty decent. It's been holding up well relative to the market. Orange line above zero, so you can see that. MPC, this is also pretty nice. Downward sloping trend line coming through here. Stock is able to get through that and through this horizontal resistance. Yeah, that looks good. What else would I want to see? On a 5-minute basis, market is doing what? Well, you already know it's compressing, right? Compress, compress, compress. So, what is this stock doing? Grinding, grinding, grinding higher. That tells me that institutions are in there buying it because at a time when the market's doing nothing, they're trying to gobble up as many shares as they can get a hold of. Okay, nice. MPC looks pretty good. PDD, downward sloping trend line, breach to the upside, above major moving averages, still some resistance here to get through. Not bad. DVN, okay, nothing great. Don't want to go through the play-by-play on that. This is Schwab, not bad. Downward sloping trend line, breach the upside through the 200-day moving average. Still a little bit of resistance to get through there, but yeah, this is nice. Schwab looks actually pretty decent in here. Couple more. This is Pop Bull, by the way. It looks for breakouts on a D1 basis. One of my favorite swing trading searches. Excuse me, this is Green Royal Flush. I had mentioned earlier, all of these stocks are on a buy signal from a 5-minute basis all the way to a D1 basis. Also, another favorite search. Starbucks, take a look at a couple more. LVS, moving higher. Same thing as Win. I don't see anything as compelling as FSLR. What the heck? Let's take a look at Pop Bull. You can see some of the same names in here. OVV, not familiar with that one. PCG actually looked good too. There's a bullish flag. There's your flagpole, downward sloping trend line, close on the high. Very nice. And just going to take a look at a couple more. Got a number of really decent looking stocks that are well off of their lows given the market making a new low just last week. So those are the types of stocks that I'm going to be favoring because they've already shown that they have buyers. They have shown and demonstrated that there is support. I'm not going to be bottom fishing laggards that are popping right now. I want to see something that has already shown support over the course of the last 2, 3, 4 weeks when the market was getting annihilated. Thanks so much for watching, everyone. Hey, we got a little bit of a dip here. So what we'll be watching for is we got a bearish 1OP cross right here. We want to preserve that level right there, which I believe is SPY 376. We don't want to distance ourselves from it, but anything that starts to look a little bit organized in here from a selling standpoint is going to be good. When we get a bullish cross, then we'll be looking for the market to run higher today. If we take out this 376 level on this bearish cross right now, we could see quite a bit of selling. Who knows, maybe even challenge the open. So stay flexible, watch the price action for the market. It dictates everything we do. Market first, market first, market first. If I had to tell you which of the scenarios I believe is going to play out, I believe that this is going to lure in some bearish speculators. The market will find support and then we'll get a late day leg higher. This is only a bounce. I'm not looking for anything to last more than a week or two right now, and I am expecting some aftershocks, and I'm expecting that the bid will be tested and that somewhere toward the end of October we will make a higher low double bottom, and that will actually be a better buy, something like that. Then this would be a much better entry point for longs than this, because this is just the beginning. This is just telling us that yes, there's a chance that the support level might hold. Thanks so much. Good luck with your trading, everyone. We'll see you next week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.